I'm happy to see so many people here tonight. This actually is a great honor for me to be your financial advisor. When I look around the room and see all of my friends, my neighbors, my family members, we kind of say that when you're with Morgan Wealth, we treat you better than family. But it's also a very humbling experience because I know a lot of your lives and what's going on in your lives. But I can't tell you how much we love being your advisors. We are a company that's a family business. We've been doing this for a number of years. And to look out of this room with all the different people and know what's going on in your life and know that we've gone through the struggles with you, it really means a lot. You know, at Morgan Wealth, we're really on a mission to be the material change in the lives of every soul that we touch. And as we go about and we do the things that we do, it really is the most rewarding experience that I have. 3 years ago, when my wife Sonia started to work with us, she had been a retail manager and an executive for a number of different companies for years, and it always was a transaction. And she quickly learned how deep and how close we get to our clients. And she's seen the highs and the lows in people's lives, the goods, the bad, the tragedies, the suffering, the things that are fantastic, the graduations, the weddings, the new babies that are born. But it really means a lot that we get to be so connected with our clients, and I want to thank you for that. So tonight, we have my partner, Ron, did this as a personal favor to me, and he also brought my radio from Omaha, Nebraska. I appreciate them coming. I'm going to explain to you the reason why we made these changes and why we're doing things different at Morgan Wealth. So we're first going to start off, we're going to talk about the evolution of business. As you know, business as we know it has changed, and changed dramatically. So as you look at the screen, it's going to talk about a famous retailer that we all know. You can probably guess the name, but if you want to shout it out, you can. In the early 1900s, this company was known for a catalog and mail order delivery business. In January of 1925, they didn't have a single store. I didn't know that. And then 4 years later, they had 300 stores. And then look what happened to the company. In 1925, they bought one of the biggest washing machine companies. Anybody know who we're talking about? Yeah. And in 1927, 2 years after my mother was born, the company expanded to do tools. And how important are tools? But look what happened with the company. In the middle of the 20th century, their sales reached around 1% of the GDP of the United States. That's about $180 billion today. Then in 1993, they announced they're not going to be in the catalog business any longer. Then they decided to streamline their approach and focus on their malls because malls are the place to be. Well, you guys are all down here in Visalia. You've seen what's happened to retail stores. We've got some people that are in the retail business here now. What has happened to the world? I mean, do you remember going to Grant's? Do you remember going to Whitefront? Do you remember shopping at Montgomery Ward? It's all changed. But look what the CEO of the companies did. They went back and they said, look, the mall is still powerful. So what they did was they went back and started to defend what they were doing to try to legitimize how the businesses operate. What's happening in the banking world? There's been so much consolidation in banking. Does anybody remember the Bank of Visalia? How about the Danube? Kings River State Bank, which became Valley Independent Bank, which became Rabobank, which is now becoming Mechanics Bank. There's huge consolidation of the financial business. And so this is disconcerting to all of us because everything that we've known has changed and changed dramatically. And me as a small business owner, I think the same way as everybody else does. What's happening around me? You know, I love being Joe Morgan, the advisor from beautiful Danube, California. But the thing about being Joe Morgan in beautiful Danube, California is I always wanted to be able to give the same advice that you get in Wilshire Boulevard in Los Angeles, what you get on Montgomery Street in San Francisco, what you get on Fifth Avenue back in Manhattan. But how would I do that? So, and you think about technology. I mean, anybody here has a smartphone in the room? And how many people do I know that 10 and 15 years ago would not do online banking? And nowadays, you would be amazed at how many billions and trillions of dollars are transacted all electronically, just because there's had so much consolidation and change in the industry. So what we had to do is, at Morgan Wealth, we had to ask, who do we want to be? As all these things are changing in the world around us, who did we at Morgan Wealth want to be? So, as we're considering this partnership, and Ron actually started doing this. I've known Ron for more than 10 years. Ron was the top advisor at LPL Financial. In 2009, Ron has the largest advisor coaching business in the United States, and I became one of his coaching clients. So a lot of the things we do in our business today at Morgan Wealth are things we learned from Ron's coaching company. So we've had a long-term relationship, and Ron actually started this partnership back in 2012. We looked at it. We looked at it again a few years later, and then we decided to change things. But the number one driver behind it is, how will this change be beneficial for our clients? One of the things we've done at Morgan Wealth is we've had an advisory council. It's something we learned from Ron's coaching business years ago. Several people in this room are on our advisory council and served for 2 years, and I want to express my appreciation for that. But every time we'd have one of our meetings, the number one question we'd always ask our clients is, what can we at Morgan Wealth do to improve, develop, or change for our clients? What can we do to be better for you? And that's really the driving value. So the number one driver behind us thinking about making a change is how will it benefit each one of you in this room. What can we do to make things simpler, make things easier, and ultimately put more money in your pocket? Because in today's world, we really create wealth with money that people are leaving on the table. Second thing is, what relationship we build creativity and unconstrained thinking. So I've got to tell you, like I said, I love being small town Joe Morgan from the New, but at the same time, in order to get those bigger and brighter ideas, I go to quite a few conferences. But most of the conferences I go to, you always see an advisor get up there and tell you what he did to make a bunch more money, and you just did what he did. When I would go to conferences and I would see my partner, Ron Carson, get up, he would challenge me with thinking about things completely different. So 5-6 years ago, when my son Theron started to go with me to different conferences and different workshops, I told Theron, I said, Theron, what I want you to do is that you sit at the table, watch the advisors around you, see what talents and skills they have that you admire, that you want to adopt, and watch the ones that are rascals, ones that you don't want to be like. The other thing is, watch how many advisors in the room that are about your dad's age, and watch how they go back and talk about how things used to be, not how things should be. And so Darren would go to different conferences with me, and he'd say, yeah, you're exactly right. It was so funny. The very first conference call we had, 15, 30 minutes of content, and then at the very end, they always have questions. The very first fellow on the phone call that had a question said, I've been doing this since 1983, and back in 1983, we used to... And Darren looked at me, and I looked at him, and that will kill not only the business, but also kill their clients. The thing that's fantastic about Ron Carson, the thing that's fantastic about the Carson Group is they are ahead of the curve, because you're either green and you're growing, or you're right and you're rotting. Right? I mean, we've got a lot of farmers in the room. That's true. The other thing about it is you always have to be challenging yourself. So the great thing was, I was just in a conference in Chicago. Ron Carson had his partner summit back in Chicago. Beautiful place, wonderful place. I'm the new guy, so I'm sitting in the back of the room, taking this all in, trying to see what these different individuals are talking about. Because I don't know. I'm from Tulare County. Here I am in Chicago, big city. And there's a screen that came up, and Ron was talking, and I just about fell out of my chair. He said, next, new. And I thought, that's it. Because if you're not ahead of the curve, you're behind the curve. One of my good friends is a financial advisor down in Los Angeles, and they just changed the name of his company. And he's doing a video on LinkedIn, and I'm watching the video, and he said, one of the things we're doing is we're keeping up with industry trends. I love that guy. But if you're keeping up with industry trends, that means you're not ahead of them. What I want to do for all of our clients is make sure that I'm ahead of them, and make sure that we're doing things that are better for you. We don't like things that are a fad. But if it can improve things for you, that's exactly where we want to be. And I know, I'm 60 years old now. I have come to the realization that the longer that I live, the less that I realize that I know. And the one thing about me, there's 2 gifts that the good Lord gave me. Calm. Even though I'm an anxious person, I'm calm. But the other thing is an insatiable desire to be better. Another advisor that I knew down in Southern California said, Joe, you're so lucky. You're a CFP and you're in Visalia, California. You're in Tulare County. You have no competition. I said, what? He says, you don't have any competition. I said, well, what do you mean? He said, well, you don't have anybody around there. How many CFPs are in your county? How many CFPs are in Visalia? And I said, I know what you're talking about, but you're wrong. And I said respectfully, but let me tell you, my biggest competition is the man that I was and the things that I did yesterday. Because the good Lord calls us to a life of being servants. And what we need to do is take our talents and skills, not bury them, not waste them, but to go out and utilize them. And I've got a certain skill set, and I've got a certain talent, and I want to use them to make it better for each one of the people in this world, if I can. The last thing is, how do I increase scale? And again, I might be something in the New California, but I start walking around with the other advisors in Manhattan and San Francisco, and I'm kind of a small guy. But think about farming. Think about being a farmer with 40 acres. If you had a chance to partner with another farmer that's farming 9,000 acres, all of a sudden you can utilize their resources, their tools, their equipment, their manpower, and that way you can get that scale. The one thing that I've always wanted to have in my practice is to have a team of people that are accountants, JDs, Juris Doctorates, CFAs, and brighter minds than myself, so we can bring that talent and utilize it with our clients. And with this partnership, we can actually do that. And that's one of the driving factors. So, who do we want to be? We are Morgan Wealth. And that's one of the beautiful things about the partnership. It isn't Carson Group. I am part of Carson Group. But it's still going to be Joe Morgan. It's still going to be Sonia. Oh, I didn't get the right slides. I apologize for that. It's still going to be Sonia. It's still going to be Tiffany. But what is our mission? Our mission is to provide multi-generational financial confidence. And really what we wanted to do is do that through a combination of transparency of fees, do financial planning for you, and providing the right advice at the right time, and anticipate the things that you need before you actually need it. The team is going to be, there we are, Joe Morgan, my wife for 29 years, Sonia, and Tiffany has been with us for 5 years now. The primary contact will be Tiffany Rogers, who's our customer service associate. And the things we're going to focus on, just like we had done before, planning and guidance. I am a certified financial planner, and I will continue to do that because that's my core of what we do as a business. We want to implement a customized investment strategy. We use the strategies of Carson Group, but what we do is I am still the person who's pulling the trigger, making the decisions. I've had one-on-one conversations with the people at Carson Group specifically about what we're going to do with our clients and how we will do things better, and we can do things we couldn't do where we did before. And the key thing is being able to assemble a team with decades of experience. The best thing about being Joe Morgan from Vancouver was, I'm Joe Morgan from Vancouver, but the worst thing about being Joe Morgan from Vancouver was it was just me. And that would disturb me. And if it didn't disturb you, it should. So if you think about it, when I go on vacation, who's watching? And that's how we need to assemble the team. So, brand new website. Has anybody gone to a new website yet? It is okay. Okay, good. Yeah. It's much better than what we had before, and you'll be able to utilize things that you've never been able to do before. Oops. Wrong button. So what I'd like to do is introduce my partner, Ron Carson from Omaha, Nebraska. Just as a word of information, Ron is the founder of Carson Group, an Inc. 5000 firm. He's also a certified financial planner and a chartered financial consultant. He is a Barron's Hall of Fame top advisor. He is a Forbes contributor. He's a radio show talk host. He's also a New York Times bestseller, and he is on both Fox News, if you ever watch Fox, and also on CNBC. Ron, thank you.
Hey, thank you for inviting me. I was flying in tonight, seeing the farming. I just love it. I want to tell you a little bit about myself. My goal tonight, though, is to have you understand why we partner, why I'm working with Morgan Wealth. But I think in order to understand that, I want to give you a little bit of history about Ron Carson. I grew up on a farm just north of Omaha, Nebraska. Anybody ever been to Nebraska before? We're talking about it at our table. Were you surprised how many hills? Gosh, people are like, think it's flat rather than flat. And lots of hills. And grew up just north of Omaha. And my entire life, I thought I was going to be a farmer. And in 1982, my parents went broke farming. Anybody remember the farm crisis? Farm aid and or anybody remember the interest rates in 1982, by the way? 21.5%. And so, going through my whole life, thinking I was going to be a farmer, I remember my dad saying, Ronnie, I can't even support my own family. You're going to have to find something else to do. And I was sitting in a study hall. I'm reading a magazine called Money Magazine. And it was like the top 10 professions of the future. And one of them said to become a certified financial planner. And the CFP was just really getting going in those days. And I thought, you know what? That sounds good. That's what I'll do. So I went down to University of Nebraska, and I literally started my business out of my dorm room then. And I had no clients. Nobody knew who I was. Really, the independent thing in those days was they didn't know who an independent was. You had the Merrill Lynch and the E.F. Huttons and Dean Witter and firms that you haven't even heard of today because they've all consolidated. One thing I did have, early on, I was what you would call an unconscious incompetent. I didn't know what I was doing, but I didn't know that I didn't know, right? Because in those days, there was not the internet. It certainly didn't have smartphones, it didn't have cell phones. There wasn't a lot of information, and Wall Street took advantage of that. There's some books that you can read out there that are embarrassing to me of what was going on. I mean, if you were buying a bond back in the early 80s, anybody buy a bond in the 1980s in the room here? You were probably paying a 4 to a 5% markup on that bond. You didn't even know it. We as advisors didn't know it. And I want to come back to being unconscious and incompetent. I'd go out and I'd talk to farmers. And I could at least talk weather, could talk John Deere equipment. It was either red or green, right, in Nebraska, which is International Harvester at the time. My value add was everybody owned mutual funds, and they didn't know what they were worth, because the mutual fund companies in the 80s charged such a high front-end load that they didn't tell you what it was worth. They would give you the share price and the share value, and you had to figure it out on your own. Seems like a pretty simple exercise that a lot of these farmers, like, I don't even know what this is worth. So I'd get out my calculator, I'd take the share price and the number of shares and say, here's what it's worth. That was my value add. And so they would invest money with me, and the saying is, you'd rather be lucky than good any day. It was the very beginning of a bull market, and the market was taking off, and so I had worked with a lot of people that had trusted their money with me, but I started to learn very quickly about the CFP, and started to realize that there was such a conflict on Wall Street, the way they were doing things, kickbacks, payments, additional fees, undisclosed fees, all of this stuff. And so I started a coaching program. Became an independent advisor. I've always been independent. I've never been, I call it the dark side, or the evil empire, which is that side. By the way, I want to just distinguish something for you as we go through my talk tonight. Who in the room, and don't be embarrassed because 99.9% of Americans do not know the answer to this. Who in the room knows the difference between a fiduciary and a broker? Anybody think they want to give it a shot? What do you think the difference is?
A fiduciary has to work for you, for the customer.
Yeah. Versus the broker.
Who just makes money.
Yeah. That's actually pretty doggone close. I mean, congratulations, because you're in the top 1%. It's because society doesn't get this today, and I find it embarrassing that financial services still operates this way. A broker is only required to disclose something to you and suitable. And they disclose it, they don't have to tell you about it. All they have to do is give you a bunch of legalese, and if it's in there, it's legal. I want to read something. I just read this coming out tonight. And it's like, this stuff happens pretty much every single day. So this isn't anything new. And it said, this was in Investment News, one of our publications, and there was a complaint filed against UBS, a big Wall Street firm. What happened was, last year, remember the market got volatile last year? And in December, UBS had this strategy that they sold to all their clients that said it was very, very, very safe. In December alone, this strategy went down by over 20%. Can you imagine if you had super conservative money and in 1 month you lost more than 20%? So now there's a bunch of lawsuits out there. Now again, they did this on the brokerage side of the business, not the fiduciary side. So UBS says, we did not mislead any of our clients about the risk. They go on to say that the clients actually knew the risks they were taking because they actually signed documents saying that they had received the prospectus and understood all the risks. Think about that, right? And what was not even in there was after this arbitration was filed, there was an additional finding that there was additional fees on top of the fees of another 1.75% per per year. The point I'm making here is that just because it's legal doesn't mean it's right. All the banks that caused the financial crisis, by the way, are still doing the same things that they did then. Believe it or not. Still, most of them, in my opinion, shouldn't even be in business. A lot of them should have done time. It was that bad. And the stuff is still going on. So think about it. We've got FINRA, which is a self-regulatory organization. So on the brokerage side, they started this self-regulator. It's almost like you hire yourself to watch yourself, right? To be in charge of yourself. Crazy. And then there's the SEC, the Securities and Exchange Commission, which is, by the way, a government agency that regulates the fiduciary side. Now, as a fiduciary, we're required by law to put your interests ahead of our own, by law. Suitability of fiduciary. I gave a talk in LA to 60 CEOs from around the country, and I asked that question, by the way. Is it Brad?
Yes.
Brad. If 60 CEOs, not one of them knew the difference between a fiduciary and a broker. I said, if you take nothing else away from this talk tonight to the CEOs, you will make a much better decisions in the future because there's what we call an alignment of interest. So there's this cottage industry that's starting to emerge in the 90s called the RIAs, under the Registered Investment Advisory Act, regulated by the SEC. But 99% of all the businesses being transacted on the brokerage side, because it's very profitable, there's all kinds of disclosures that are buried, all kinds of money that's being made in ways you can't even imagine. I was reading a prospectus the other day that this firm was selling these things, and it was a brokerage. There was like a 15% commission paid to the advisor. Consumer, really, you wouldn't see this, right? And until you go to sell it someday. And on top of that, this firm was charging management fees not only on the amount you invested, but the amount that they went and borrowed against it. So they were leveraging it up 3 to 1. So the internal management fees were 6% per year, in addition to this 15%. Look, this is stuff going on as we speak today. There was a huge fight, by the way, on Wall Street, and there was going to be harmonization. Anybody remember anything called the DOL rule? The Department of Labor was coming out with this rule that was going to cause brokers to have to act in your best interest. And Trump killed it. Trump killed it. And of course, because there's so much money on the other side. So it is, even in financial services today, it's definitely buyer beware. So as I go through my career, I'm seeing huge amounts of conflict and things that I thought just most consumers had no idea what was going on. This fledgling new movement called the RIAs, the act goes back to 1940s, but really no one was really operating under it because it wasn't that lucrative, right? Because you couldn't hide everything that you were doing. But it started to take and get some traction. In the 90s, it started to grow a little bit, and then it started to really accelerate. And within my coaching group, Joe talks about this. I have about 5,000 advisors today all over the country that want to be better advisors. The problem is, the challenge is, they're small offices. So they can't afford all the resources that a UBS or a Merrill Lynch or all these other firms can provide. But they're on this side wanting to do what's in their client's best interest all the time, every time. And so that's why in 2012, I said, what if we band a lot of the RIAs together and we're able to provide anything and everything that the largest Wall Street firm can provide, but we get to do it purely on the fiduciary side. And Joe, you were at the Partner Summit in Chicago. Is that 2 weeks ago? I lose track of time. And in the room, we are so picky about people that we partner with. I've known Joe for 10 years, known Sonia almost, I think, the same amount of time. And this is a movement. This is something that one of the things that my promise to you tonight is your experience will be really good. You're going to see technology, which is great. You're going to see investment strategies that are very straightforward. I built my firm on protecting the downside. One of my mentors told me, he said, Ron, if you protect the downside, the upside will take care of itself. And and we are very innovative in some of the things that we've done. Our partners, TD and Fidelity. By the way, just Google Fidelity, TD, and just see how many negative headlines come up. Be zero. And then Google all the brokerage firms, the LPLs. LPL kind of straddles it because they're what's known as a hybrid, so you're not sure if the advisor is acting as a fiduciary or a broker, which is a whole other issue. And as I talk about this, and we've gotten in, we have incredible, there's no Wall Street firm that can do anything for you that we can't do today. But we can do a lot more because we truly sit on the same side of the table as you. And I talk about the 3 dimensions of trust. You know, as a consumer, when you do business with anybody, especially as it relates to your money, I think the first question you probably ask yourself, the first dimension of trust is my money safe? Is this person going to steal my money? Do you know that one reason why someone logs onto their bank account or their brokerage account? Just to see if it's there. Think about that, right? You've been traveling, you go, I haven't logged on in a couple weeks. You may not know, but subconsciously there's just an itty-bitty amount of relief when you see it's there. And then the next is, how did I do? Did it perform well? Pretty easy hurdle to overcome because Merrill or even the evil empire is not going to steal your money. And the major custodians aren't, unless it's Bernie Madoff, right? They're not going to steal your money. Then the next dimension of trust, though, 65% of Americans today still do not trust financial services, and they throw it in a huge category, just all financial services. So the second dimension is my advisor going to put my interests ahead of their own? Well, only 35% of Americans believe that to be the case, and it's well-deserved the reputation of financial services has. 99% of those operate on the fiduciary side because they see and they demonstrate how there's an alignment of interest with the consumer. The third dimension of trust, which very few firms are operating today, is, and Joe, you mentioned it, we want to anticipate your need before you even know you have the need. And a great example of this is how many had kids go off to college or grandkids this year, right? Did you know to do a medical power of attorney? That you're proactive, you automatically do that. I mean, just things that you don't even think of. And there's technology that's going to allow us to really leverage lots of things in a single, we call it single pane of glass experience. And at Carson, we operate within 3 buckets. We have what we call the next now. And when you log on and you have the experience you have today, that next now is what we've built up to this point. But then there's the next. This is stuff that we've invested in over the last 2 years. Things will be coming out. We'll be coming out with a banking solution, which today, anybody have money sitting in a bank, checking, savings, what kind of yield are you getting on that money now? You know? 0. Pretty much 0, right? So what we're doing at Carson, by the 4th quarter of this year, we're already in beta testing right now, is we're going to be able to turn those economics, because the bank at a minimum is making the Fed funds rate, which is about 2% on that money. Or if they're loaning it out, they could be making a much larger spread. But at a minimum, they're making a little north of 2%. So we're going to be able to give you amazing banking services, and you're going to get a 2% yield. Because we're going to turn 90% of that economics, we're going to give it to you. And FDIC insurance is going to be $250,000 because we banded with 10 banks and national banks, so you have $2.5 million per person of actual FDIC insurance. That's one great example of where we're able to take what I think atrocious. Can you imagine somebody taking 90% of the benefit for themselves? You never see it because the bank is crediting it. Can you imagine if they credited all that and at the end of the year said, we're going to take 90% back for the fee? You would be upset. But no one seems to get upset if you don't see it, if it's netted before they actually credit it to your account. Another thing that we'll be rolling out into next year, this is in the next category, is legal documents where we're not trying to replace any of your professionals, but let's say you need a trust updated, or durable power of attorney, whatever, medical power. we're going to be able to have our advisors be able to, through a national law firm, actually provide these services for pennies. You know, today, core documents get done in estate planning can run $6,000, $7,000, $8,000. We're going to be able to do it for next to nothing for the benefit of our clients. Again, pushing the economics scale. You mentioned it, Joe. So that's the next. And then there's a third bucket, and that's the next. Like, what investments are we making today that are critical to be able to serve our clients into the future? And one of those is investing in the next generation of financial advisor. You may not know this, but there's a shortage of financial advisors out there. When I'm in the mid-90s, there was roughly 550,000 financial advisors. Today, there's 288,000. 111,000 of those 288 are going to retire in the next 5 to 7 years because they're old. There's more people, there's more financial advisors over the age of 80 today than under the age of 30. Think of that just for a moment. And I'm including the good and the bad, the brokers and the fiduciaries. There's just not very many of them. So we have partnered with universities around the country along with Barron's. Some of you read Barron's, Wall Street Journal, all part of the same company. And we are sponsoring the business schools and providing Barron's, and then we're doing what's called an intern to hire program. So we're bringing people into this profession and training them so we have really good advisors to make sure that your kids and your grandchildren, your great-grandchildren will have a really well-trained fiduciary to watch out for their interests into the future. So that's what this movement is all about. And I probably front-ran pretty much every slide that I had here, but that's okay. This is how we think about the relationship, though, the advice value stack. If you look at the bottom, just managing your money, I'd always say that's table stakes. I used to say, well, everybody does that. But when we get a new client in and we look at how many of these are really being done at a high level, and it's not very often that it's being done. In technology today, and it's not that I want to go back to the fiduciary side. Even as a fiduciary, it's hard to stay on top of this stuff all the time. Joe had mentioned in Omaha, we have many attorneys, CPAs, CFAs, CFPs, all this stuff you really don't need to care about. But think of it this way. Joe and I, when we first started, had an enormous amount of pressure to know a lot about a lot of things. We tried to be a library of information, but it was quite frankly exhausting. Today, all we need to be is a librarian, because we know we have all of these resources, subject matter experts, to where we can provide these services to you, and all the way up the value stack, depending upon what it is you want to accomplish. I can tell you another investment we're taking and making in what we call the next category, this future investment we're making, is around technology that's going to be able to look at all of your stuff all of the time. So if there's a tax law change, an income tax change, or you've got something coming up that we can peer directly into what your personal financial situation is, we're going to be able to generate proactive ideas operating in that third dimension of trust. Trust services we provide as well. That's another area that's been dramatically under-serviced relative to the fees that are charged, to the value that's actually given. So if you have today a trust and you've named some corporate trust bank or trust company, you have no idea who's going to be there to give advice in the future. With Carson Trust, we're a multi-billion-dollar trust company. We actually operate our trust organization is out of Kansas City, Missouri. It's a directed trust model where we have actually a trust officer that can work with your family in addition to providing trust services and knowing, going back to that investment we're making for the future, your family, your kids, and your grandkids and great-grandchildren are going to actually have an advisor there to take care of them. We have to review all your documents, do comprehensive planning, not just a planning that's done in a static way, but to keep it continuously updated, and then tax assistance. We're not trying to replace anybody doing your taxes, but if you need tax prep, we can provide it. Tax planning, we can provide it. All part of the relationship that we want to have. We want to be proactive. Also, this came from my advisory council years ago, is communication. giving you information as soon as we legally are allowed to. Now, there's some rules around when we can tell you when we actually did something in the account. The regulators don't like to have what's known as front running, so we can't tell you, hey, we're getting ready to buy something, because then theoretically you could go out and buy it, and then we force the price up. But we're really good about getting things like trade communications, trade notes out, and it's not technical at all. Clients say, hey, Ron, I'm just curious, why do we buy Johnson & Johnson, or why did we sell Bristol Myers, or why do we add, why do we cut the position? It's written in really short layman terms. If you're interested. If you're not interested, don't even pay any attention to it. One more thing on communication. We do a quarterly market commentary. We do a weekly commentary. Every single morning we have, at 7:30 Central Time, which is 5:30 your time, that's our reporter for our West Coast partners, we have a different topic. This morning we had our chief investment strategist on, we had our research department on, talking about some of the different strategies, talking about what's going on with China, just keeping them informed. So that happens 7:30, all reported for all of our partners. So they are really up to speed on what our thinking is, what we're doing, and how we're managing the different strategies. I share, sometimes I don't share this to impress you, but to impress upon you that we've gotten recognition by third parties about our business model and what we're doing. We are, Joe and I and our organization, we're one of only 2 independent firms in the Barron's Hall of Fame. And it goes back to the inception. We've been on that list ever since. We write for Forbes. We're in Forbes 3 times a week, or 3 times a month. Not that that means anything, but you know, it's not easy having your thoughts shared in some of these mainstream financial press. Best places to work. I'm a big believer in taking care of internal. We don't have, by the way, at Carson, we don't have staff, we don't have employees. We have internal stakeholders, and you're an external stakeholder. We don't work for each other, we work with each other. And to me, words matter. Culture is super important, and my team, and people like Joe and Sonia, they give it their all, even when it's not convenient for them to do so. And I love to say, because Omaha is the center of the universe. I don't know if you guys knew this or not. Here, I want you to hear something. Anybody ever think that like in the middle of the country, like Nebraska might be behind, a little bit behind the coast? Anybody ever think that? Yeah, you did, right? But here's what's really happening. It starts in Omaha, and then it, just like a pebble in a lake, it goes out, and then it hits the coast. And then by the time you're doing it, we're already off to the next thing, but it looks like we're so far behind when we're so far ahead. Okay, that's being in the center of the universe. But what I love to say is nobody will outcare us in Omaha, Nebraska. The team works hard, we're super competitive, and they really care about what we do and how we do it. And we've been recognized as best places to work, both in financial services and fintech, because we've developed a lot of the technology in Omaha to provide this great experience for you. And so, again, we've had to give you some confidence in what others think about what we're doing. And our commitment is not to defend what we know. I love what you had to say, Joe. Not defend what we know, but embrace the unknown. Every single day, I wake up, I think of us as a day one company. What new information's out there? Being adaptable for the future has never been more important than it is today. None of us can imagine what's going to percolate up beneath the surface. If you're not moving as fast as the outside world today, companies that aren't are going to go away. And if you think technological change has been fast, it's been a trickle up to this point. And the avalanche is near. There are technologies, and sometimes you hear this, and like my dad, he's like, Ronnie, I don't even want to think about it because I don't like all this technology. And then there's my children who are super excited about everything. I just think it depends on your perspective. But for me, it's really exciting because what we're going to be able to do for the benefit of the people we serve. So we're going to continue to give you an effective game plan. Also, we're going to talk to you in a common language so you understand what it is that we're talking about, and we're going to be super free, straightforward, and transparent. And I don't even like the term fees. I want to call it an investment. None of you hired Morgan Wealth to make 1% less a year. I don't think, right? I said, I'm making too much, I'm going to hire an advisor and kind of reduce my returns. No, never did that. It's an investment. You expect that you're making an investment and you're going to get a return on that investment. And so we want to make sure that the investment that you're making is so clear to the value that you're receiving beyond a doubt that, and I know you've gotten that up to Joe, we want to be able to help you accelerate that as we move well into the future. And then partnership is so important. Fidelity and TD, amazing custodians, that's where all your money will always be. Fidelity, by the way, is one of the coolest organizations ever. The Johnson family is a private company. They have given back so much to society that they could have monetized. The family is very wealthy, but they could be a lot wealthier if they had not. They have a center in Boston called the Fidelity Center for Applied Technologies, and they developed like the internet security protocols that allowed the internet to even exist early on, and they didn't monetize that. They gave that to mankind, basically. Very altruistic organization, very, very tough to do business with from our perspective, and that's good. They're very picky, and also cybersecurity. They have the toughest cybersecurity audits that we go through, and so cybersecurity, your information is critically important today. And this, by the way, clean new technology is where you want to be if you want to protect your information. It's when the old legacy stuff tries to integrate with the new stuff that we're starting to see some of these security breaches. And Fidelity requires all of us to have very, very tough standards as it relates to your information. Also, your investment team. Nothing changes here. You're going to have the same services, the same team, plus you're going to have a lot more. Joe and his team are thinking about, quite frankly, every day they're living in the next now. Next now, because there's no time to go next, and the next. Because it's exhausting just living in the next now. I know, because I used to live in that whirlwind myself. Today, they now have a lot of resources behind them. Bless you. Heaven forbid if the entire Morgan team were killed by an earthquake, we would be sad. But your services would not miss a beat. Okay, and that's important. And so there's a lot of resources that's set. And by the way, we run triple redundancy on all of our information. So not only in Omaha, but we have 2 facilities that information runs, plus our custodians also have all the information. So we're very, very comfortable about our ability to do business, pretty much in any environment. Nebraska, we can have an occasional tornado, but in order to have all 3 of our locations, and then all that data is still backed up, so it's still secure. Even if all 3 locations went down, you just may theoretically not be able to get to it for a few hours, but that would be a worst case scenario. So with that, I would love to answer any questions that you might have about the partnership that we have with Morgan Wealth. And there is no such thing as a bad or a dumb question. I promise you. Yes, sir.
I'm just curious, from the picture you painted at the beginning, that for decades the financial industry has hidden all these fees, and they're out there behind these castle walls and making all this money. If you come in there with a flashlight and expose what they do, there's got to be some sort of, they're probably going to have a counter strategy to deal with the little Davids who are trying to slay the Goliath. I don't know.
So some of them, like Goldman Sachs, just bought our biggest competitor, United Capital. I was sharing this at our dinner table tonight. And so it's unclear how Goldman's going to play this, but so United Capital, like us, very similar to us, a fiduciary, but Goldman's not. And so is this going to be their way to go, hey, we also have this fiduciary way to actually do business with us? We'll see if that works or not. I was on a call with Goldman Sachs because one of my clients was looking to sell his company to Goldman Sachs. And we literally, our analyst was asking the Goldman Sachs banker some questions about the deal. And they went through and he had exposed something that it's like, this is incorrect and you've actually valued this improperly. And he made a comment that investors would never notice. I mean, he actually said this on a call. And that was right around the time, I don't know if you remember this, when a Goldman Sachs person left and they talked about retail investors as Muppets. Do you remember this, the Muppet treatment? Any chance you could probably Google that, it would still come up. So they have no regard. It's still to this day, it's like, how can we make the most money we can on all of the fees? The financial crisis, Goldman Sachs was creating synthetic junk, these subprime mortgages. I mean, you guys know out here in California, the whole country was hit with this stuff. They were creating this toxic stuff and selling it knowing it was going to default. Absolutely, positively knew the stuff that you were putting money into was a synthetic time bomb that was going to go off, and they were making as much money as they could, and they were selling it off to you, to the consumer. So, Mel, I think the way I look at it is, I want to relate it to telecommunications. In 1996, the Telecommunications Act was passed. No one really noticed. Anybody remember 1996? Prior to 1996, how much did it cost to make a phone call? Anybody remember how much it used to be? Man, it was expensive, right? We're talking 30, 40, 50 cents a minute. Expensive. Then they deregulated telecommunications. All of a sudden, you have all of these new firms like WorldCom, Level 3 Communications, this broadband. They were able to drive down the cost of a phone call and allow these smartphones to exist. But on the other side, you had all of the bells, right? And most of those bells aren't even in business today. They either went out of business or they're acquired by somebody else. But the CEOs of those companies actually saw the writing on the wall a decade before it happened. And what they did, knowing there's no way we can make this transition, there's no way we can compete, they simply milked as much as they could out of those businesses over a short period of time. And I think deep down, some firms are going to make a transition and they're going to be forced, the regulators, I just hope they come out and say, we're going to have one set of rules, everybody's going to have to abide by the fiduciary rule, and that'll force them to change, because they're not just going to go out of business overnight. But if they don't do that, and we continue to have these two sets, they're making so much money. Wells Fargo, fine. You know, you've heard of Wells Fargo, right? Billions of dollars. And they keep doing it. And they keep doing it. Remember the Ford Pinto?
Yes.
Anybody remember what happened with the Ford Pinto? Yeah. And what did Ford decide to do? This became apparent in a class action lawsuit. What they decided was it was cheaper to pay the families off versus fixing the problem. They didn't care they were killing people. Find that amazing, right? So I want to come back to financial services. The fines aren't big enough yet. Because, we get fined $1 billion, but we made $5 billion with this business practice. And until there needs to be a change. I could get really political right now. I mean, I'm not going to, but this country, we need people that you know, I don't care if you're on the left or on the right. The extremes are what's running the country, and most everybody in this country, if you're left or right, have way more in common than we have different, but our country is being run from these extremes, which is allowing these abuses to happen in the middle because no one can agree on doing anything. We had the SEC actually, for years, was running without even a full number of full panel. So because all the fighting was going on both sides. So I don't know. I think it's the writing's on the wall. It's going to happen, and I hope the regulators force it to happen quicker, because there's a lot of people out there that are wasting a lot of money and being swindled without even knowing it through these unfair business practices. Yeah, go ahead.
I hate to, but concept behind fiduciary is just great. And when you have somebody that you trust, Joe and Sonia, we just feel great about that. But just because you put the label, I am a fiduciary, who validates or proves or checks up to make sure that that is actually what is occurring? You have to have invent a whole new mechanism to figure that out, I imagine.
It's a great question, Mom, because the average audit of an RIA, this is another problem we have, is once every 11 years, because they don't have nearly the resources to actually verify. I'll tell you who is doing it though, is the custodians. Fidelity especially. They, in order to do business with Fidelity, they come in and they go through your business inside and out before they'll allow you to even do business with Fidelity. So it ends up, it's not required they do it, but they are so protective of their perfect image and brand. By the way, Fidelity and Vanguard are like the two most trusted brands in financial services today. But the regulators are, and by the way, people that want to operate on the RIA side, they are people that are totally they have a service mentality. And so you're not finding people that operate that and trying to do things. If they make a mistake or they're not following a rule, it's 99.9% of the time it's not intentional. On the brokerage side, they're constantly looking for ways they can make more money at anybody's expense. Any other questions? I'm probably boring you to death with some of this stuff, but yes, sir.
How is your company going to affect Morgan Wealth in our day-to-day things that we're going to see on the screen in the way of actively managing? And I heard Joe say he's the one who pushes the button, but how does that feedback now happen to him to affect any of us here around the room on a daily basis?
So as it relates specifically, let's just take asset management as a piece of that. So Joe now has, I don't know what our number is, maybe 51 or 52 people that are actually running those strategies and doing research for him. And it's his team. It's not like, oh, I can get you on the phone or with somebody. This is his team. These are the people that are actually running the strategies. He could call up Sarah Dewey, who runs our trust department, needs something in trust. He doesn't have that capability today. Or he could go to Aaron Wood, who actually runs our wealth enhancement group, which is the planning and the tax. Chris Opplinger, who actually does tax preparation. He literally can have real conversations with these people specifically about your situation. The other thing that Joe can do with me today is take advantage of extreme opportunities that the markets will give you. And I'll give you two examples. You remember the financial crisis? Massive number of homes you could have bought for pennies on the dollar directly from the bank. So we saw this. So we at Carson created a fund that had no front-end charges, no back-end charges. We didn't make any additional money. We charged the same, even though we had a lot of expenses setting it up. We ate the expense because we saw a really great opportunity. We bought 2,300 single-family homes for our clients. We rehabbed those and we rented them. We bought them in close to medical facilities and colleges. We bought in 11 markets. Markets like Indianapolis and Minneapolis and Charlotte, North Carolina. These aren't like maybe the places you would think of, but we had a whole process of going through and working to buy the houses. Today, our clients, we've returned 3 times their money. We haven't sold a single house. We refinanced them. We have dividend yields in excess of 12% on these houses today. And our clients understood. It's like, oh, I get a house. I get that we're buying this at 60 cents of what it would cost to actually build that house today, and that's with a brand new roof and carpets and everything else. The other thing Joe didn't have access to is we launched a thing called Mission Strategies in January of this year. So imagine an investment that you could say, hey, I don't want any downside risk. What we do is we buy a treasury, and we take some of that treasury, and we're able to buy, without getting too technical, an option on the S&P 500 or the Russell 2000 or whatever. But as long as you hold that treasury and this account for 18 months, your money, even if the market goes down 100%, you're going to get 99 to 101 back of your money. So let's essentially say 100% of your money back. No one's doing that today. We actually we had the head of risk, Ron P. Giannini, joined our firm. He's a doctorate in mathematics. We went through it, but it's transparent. You can see the positions in your account. And how many of you would say, I have virtually no downside risk, but I'm going to get, you give something up on the upside. I'm going to get 75 to 80% on the upside. Here's what's really cool about that strategy. Who would like to have had a lot of cash to invest at the bottom of the last bear market? So when you have this strategy, the market does decline, your treasury will go up in value, the option will go down, but it gives you the ability to not have to time the market, but it won't be worth 100 cents on the dollar, it might be worth 96 or 97 cents, but you could buy stocks at 50 cents, 50% off of what they were. So you don't have to try to time the market to benefit from a bear market. So there's two concrete examples. There's no way a brokerage firm is going to do that because they want to find opaque ways to actually charge you. We're very transparent about it, and we're charging the asset management fee. And you're going to see the single pane of glass experience. You're going to, who is Amazon Prime users in the room? Do you love it? Yeah. It's great, right? So when you go on and you click and the stuff just shows up, you have no idea what goes on in the background to make that happen. You have no idea. And I'm telling you, the technologies powering that today versus 5 years ago are totally different. It's the same thing for you. There's a single pane of glass. You're going to come in, you're going to take it for granted, I hope, because it's simple. You see what you have. There's lots of good information there, but we'll constantly be adding new features, whether there's a banking feature or the legal document feature, or we even are looking at financial cognitive ability for those that want it. It's like, hey, I would like to be able to take a quick test to make sure that I'm up to speed on making all these decisions. If not, I might bring in a trusted other party, a child or somebody else to do that. These are the continuous improvements that we want to make to the client experience. All right. I'll be around as long as anybody wants to come up and have a conversation. Any other questions that I can answer? I am, by the way, I'm on LinkedIn. If you're on LinkedIn, on Twitter, I put out these little videos every, 3 or 4 times a week, and they're short, and it gives some insight into things. Today I did one on, anybody here, it's totally irrelevant to this talk, but heard of charity water before? Have you? There's a 30-minute talk, and if you're interested in it, Joe can send it to you. It will change the way you look at this life I want to live. My wife and I, we started a foundation. Our kids, I have 3 kids, and from the time they were little, I said, you guys are going to pretty much get nothing because our money's going to go to charity. We're going to give it back to society. And I've seen just how lots of money ruin kids. And I love, Buffett has a quote from Oline, because I want to give my kids enough they can do anything, not so much they can do nothing. And so I've taken that philosophy. And so we started a thing called Dreamweaver, where we provide end-of-life dreams for the terminally ill, impoverished elderly. And we did 100 dreams last year. We actually had a goal of doing 100. On 12/31 last year, we did 100. We got 9 nominations just the other day in one day. There's such demand, such a greatest generation. Many of you in the room here fall into that category. And a lot of our partners live a utilitarian life. It's like, how can we do the most good for the most number of people? And this charity water, we have a big meeting once a year. When I bring this guy in, it's about how fortunate we are to have water, food. 9 million people died last year of starvation. 9 million. 1 billion go to bed every night hungry. And so, that's the kind of things, when you think about what we think about, and a lot of our partners, it's like, how can we help solve some of these things? That's where you won't find a group that is more committed to figuring out how to give back to our local communities, but also having to make a difference in the world as well. Thank you very much. Honored to be your partner and honored to be here with you tonight, Joe. Thank you.